How's it, guys? Welcome back to FX Rhapsody. Today we're just going to be looking at our currency pairs after our analysis this last weekend, and just to see where and what happened so far in the markets. We're going to start off. I'm just going to do everyone on the hourly time frame. It's just a quick wrap up of the previous weekend and of this week. So we're going to start off with the British pound US dollar. Now, weekend's analysis, I was talking about this fair value gap that was broken or that was created. Just drawing out here. And then we were looking at, and I was talking about price, we're expecting price to move to the upside. So for those of you that caught this little buy up to the top here, we can see that price went up slightly, and let's say you climbed into the buy and you took some profits. You could have caught a nice 100 pip profit, until price reached the top here. I'm just going to highlight this area over here as well. You can see a little bit of area of resistance the price went into. So we see price consolidating a little bit in this area. We also see that price tapped liquidity at the bottom here. Okay, as you can see, price came up. There's some, because we're looking at a uptrend, on not uptrend per se, but a little bit of upwards movement on hourly. So you have your sell stop orders at the bottom here, and price, like it always does with price action, goes and hunts liquidity on the top here. Went up, resistance this area, so still currently in this consolidation. So we want to see price breaking either that area or this area at the bottom to continue on to a trend, be it up or down. But again, doesn't matter if on the higher time frames there's a bullish or bearish movement, you can still catch your pips. Let's say it is in a bearish movement, you can still buy up and catch, like you just saw with that fair value gap and the imbalance in the market. You can still get some pips, on any trade. Let's move on to our US dollar or Euro USD dollar. Now, with this pair, I was looking at, I'm just going to minimize it a little bit. Okay, we had our Fibonacci in over here. Okay, this was our weekend analysis. The price went up, came down, and it tapped into our area of the 62% area. And we could see a nice little run up in price from here all the way to the top. Reason that it's just going to take this out, and I'm going to draw a little line here. So we had a nice area of or resistance at the top, or a support or a resistance area with what's on top of there, liquidity. So again, price action being what it is, hunting liquidity. If you had to be in that buy, you could have caught a nice, let's call it 140 odd pips movement up, because if you went into a buy on this retest on the 61 to 70% area and you held it, price went up and tapped, so you would have had your your take profit area on that top over there. Price currently went down a little bit more, as you can see, and up. So currently we're looking at price hovering in this area. So we will have to see what price does towards the end of the week, and then we can have a look at that again on this weekend. The last little one we're going to look at will be your British pound, Japanese yen. Very interesting one, this. Excuse me. Okay, zooming out just a little bit on the hourly. Okay, but some comments about, Japanese yen selling off and all that. And it doesn't matter if it's selling off on a higher time frame. Again, I'm just letting you know, it doesn't matter if it's in a higher time frame bullish market or bearish market. You can still catch your trades on the opposite direction on a lower time frame, depending on what type of trader you are. Okay, if you are a swing trader and it's in a bearish market, hang into that until you see some signals of a turn in the market, or vice versa. Intraday trader, guys, and towards the scalping area, you can catch any direction. Doesn't matter if it's in a bullish or a bearish market. All right, so what we looked at this weekend, I'm just going to draw it all the way to there. Okay, so weekend analysis, we saw that, area being tapped. That was the area that we're looking at, price coming down. That was the previous area, like you saw, price action tapping into that area because we had some liquidity on the top there. Okay, and I was still talking about, and we're looking at the COT reports of the yen strengthening a little bit, and I still said, I'm looking at price moving to the upside, and sure enough, it did, right? It's not blowing whistles or anything. I'm just, this is what happened. So we could see price breaking this area over here, okay? And then it's leaving a fair value gap, okay? So I'm just gonna leave that there. So how do you trade this? Or what could you have traded? So basically, when price broke this area, and let's call it the previous high over here, okay, it left a fair value gap over there on the top, on the bottom. So price moving up and then starts moving down again. Now with this downwards movement, because with this fair value gap in the market, you could have waited for any sell opportunities for price to draw back into that area of the imbalance and fair value gap that it created. So price gets drawn into that area. As we see, that's what happened. Okay, but with that pullback in the market, okay, the pullback, price drawn back, price created another fair value gap top here, as you can see there. All right, so that's another area price gets drawn. So once price hit this area, there's a nice buy opportunity for you to take because price gets drawn into that area. Into that area. Okay, so this is, I'm just going to highlight this out again. So you get that area that price gets drawn into, and you get that price, that area that price gets drawn into. Okay, just going to mark it out. That's a 130, or let's call it 120 pip drop. And this one will be a 121 rise. So you could have sold it off on an hourly time frame, 120 pips, and you could have bought 120 pips up. And once it hits that area, we're looking at sell opportunities again, because now it's fulfilled this void and this imbalance in the market, and then price selling off again, and then again you have another move of about 130 pips down. Okay, so guys, react to the market. Don't just predict it. Yes, predict, make your analysis, do it, pin it out, but then react to the market. When there's gaps forming, when there's imbalances in the market, trade them, guys. Don't be weary about it. Have your risk in place. Okay, that's all it is. If you go into a trade, have your risk in place. If it taps your stop losses, that there's a certain amount of money that you risk. If it doesn't, if it pans out in it, most of the time, especially when your analysis is correct, trust your analysis. It will work out for you, and then you will make some nice profits in the market. Okay, so that's all from my side today, guys. I hope you enjoyed this analysis, or just a little update. Don't forget to hit that like button, hit the subscribe button, hit the notification bell. There's definitely analysis. It's almost weekend again, analysis coming your way. Maybe some more videos before that. Guys, I hope you are having a wonderful week. Stay safe and happy trading, guys.